Let's get right to the floor show. Aaron Gibbs is CIO of Main Street Asset Management, and we've got trader Scott Bauer. Trader, you're the volatility expert here. I want to say about 18 minutes ago, the Dow was up more than 200. The S&P looked really strong. Same with the Nasdaq. And then while they're still up, they took a big dip down. So can you tell me about what's going on in the volatility moves that we see, at least in this session?
We have seen some real big volatility moves, Liz. And you know what? People are on edge. Retail is on edge. And whether it's the algos driving the market or not, the retail traders are following that lead. So literally with every, I'm going to say 10 to 15 points in the S&P, we're seeing the VIX actually change more than it normally would have. And that goes to the overall angst in the marketplace right now. Yesterday, when the market was at its bottom yesterday, the VIX topped out over 22. I think it was 22 and a half. And on that rally, boy, we saw that just absolutely collapse. This is not going to go away anytime soon, Liz. We're going to continue to see this, I believe, beyond the Fed meeting next week as well. In specific with today, yes, we saw the VIX, kind of pop up a little bit on that last downdraft over the last 15, 20 minutes. But this is a marketplace where I believe the new range for VIX over the next 6 to 8 weeks is probably no lower than 15, maybe even 16 on the downside, and well into the 20s on the upside.
Well, we're at 17 plus now. We had been 13 forever, which meant very little fear in the markets, Aaron. What are you seeing? Because this is the question. Ahead of the Fed, which it looks like a quarter-point cut is baked in, shouldn't you just be investing now or cashing in on some of your winners?
I believe in definitely cashing in on some of your winners. What we're seeing is a bit of a risk-off sentiment. It started in August, but really when you look at the bond markets, you just see those yields going down, people piling into safety bets. They're also piling into some of the more risk-averse sector rotations. And though technology was a little oversold, and we're seeing that definitely that bounce back in the past 2 days, a little more risk on in the last hours.
Well, sure. Avago, Broadcom is a real winner today, and Nvidia is looking strong.
Absolutely, but I still see the overall trend. I don't think these past 2 days are going to completely wipe it out. I think we're still seeing a lot of risk off, a lot of sector rotation, more into your stable companies that can handle any downturns that we're really worried about coming from some of these employment reports.
It's kind of funny. Over the past couple of weeks, I've seen real estate rear its head and become one of the strongest sectors lately. Today, it's one of the weakest. But that said, you look at what has done well over the past 3 months. While telecom is up about 20%, that chart just showed real estate is second, up about 14.5%.
Yes.
What's the trade there?
So within the REITs, the commercial spaces, those that specialize in malls, they're still underperforming. But you see some really great opportunities within residential, healthcare REITs, and one of my favorites, Equinix, which is data warehousing. So building all these data warehouses for all your servers. And so those are some real opportunities that have been driving that. But overall, the entire REIT space, looking at lower interest rates, people are expecting CapEx to be lowered, and an opportunity because it's such low value.
Yeah, if you stretch out the Equinix chart, you can see it's been on a real tear over the past, well, look at month to, over the past month, it may look flat, but or jumping, and you can see it has had a very nice performance, and it checks both boxes, tech and real estate.
Yes.
Scott, what do you like here, especially considering we're just days away from the September Fed meeting, not to mention the election, which also adds a bit of volatility, although I think that's outsized importance. I disagree that yesterday, but depending on what the post-debate polls showed, the market started to look good and then bad and then good again. I mean, I just looked at Nvidia, and Nvidia lifted the big market move yesterday.
Yeah, I think it's really, really difficult, Liz, at this point, almost 2 months ahead of the election to look at a particular stock or a particular sector and say, okay, if one side wins, this is where we want to be. If the other side wins, this is where we want to be, because we know how many gyrations we're going to have. So I think that is really, really difficult. Overall, though, when I look at everything combined, yes, the economy is getting weaker. And even though the consumer is, still kind of hanging in there, consumer numbers they're not bad. They're getting softer. They're not bad. What we are seeing is that upper demographic really spending down a little bit. That's where I see the biggest contraction. So when I look to retail, Costco to me, even at all-time highs, that's a stock you have to have because that is going to be a go-to that all demographics are going to continue to go to.
Yeah.
One area that I'm a little concerned about, actually a lot concerned about, are the industrials. We've seen some nice rallies here, but with weakening manufacturing data that we have had there, that is really not a place I want to be. And I think stocks like the Caterpillars and the John Deeres or Deeres out there, they may be a little vulnerable at this point.
Aaron, that leads to manufacturing, and we got the PPI number, came in slightly. This is Producer Price Index.
Yes.
Inflation at the business level, or inflation read, what businesses get for their goods and services. When you see that it was just a bit hotter than expected, is inflation still a thing? Is it still a worry?
I think it came in hotter because I don't think people properly took in the revisions from the prior month. For me, that was pretty much a non-event. That again, it just came in slightly. But certainly, inflation is still there. It is a concern because otherwise, we'd see the Fed already cutting. I think I think they already would have been more aggressive about cutting back on the rates. So certainly, I know that's something that we see consumers facing with because inflation is still out there and wage growth has just been able to hold steady with inflation and slightly outpace it. And so I think with just like Scott was saying, that the retail space is going to be challenging because people are going to be more careful about where they spend